How can you compare yields on real estate versus stocks or other assets? This is a very important question for investors. And first of all, we should consider that all assets have a rate of return, a yield, so to speak. This includes real estate as well as stocks. For real estate, the term you might have heard of is the cap rate. That is essentially the net operating income divided by the cost basis of the property. And the net operating income is essentially operating income. It's revenue minus expenses that you need to keep the property going, to maintain the property, etc. Now keep in mind this net operating income does not factor in debt expenses, so the interest expense on your mortgage, nor does it include your personal tax situation for the property, as that may differ based on different investors. They may have different financing profiles or tax situations. So it's kind of similar to EBITDA if you're coming from a finance background. That's the sort of the metric that's used to compare is this cap rate between different properties. And that is the metric that is most commonly used to compare the yields on real estate, versus other asset classes such as stocks. In contrast, for stocks, the way to compare it, you often hear about this PE ratio, but the best way to boil it down to something simpler is the earnings yield. So you can get that by dividing, say a stock, the S&P 500 has a 17 times forward earnings PE ratio. You can get the earnings yield by dividing 1 over that 17. So let's do a simpler example. Instead of all of that, let's take the index. Let's say it's approximately 4,000 today. And then we have a little bit of a decrease in expected forward earnings, and let's say S&P 500 earnings are 200. So then you divide 200 by 4,000, and this is much simpler because that'll tell you what the earnings yield is, and that's 5%. So you would get the same result if you divided 4,000 by the aggregate S&P 500 earnings, which is 200, so P over E, you would get the inverse of that. So that is the way to have a comparable yield. So then, let's think most commercial real estate pre-pandemic, in the past couple of years when rates are very low, they're 4%, let's say, for commercial real estate in terms of cap rates. For Manhattan residential real estate, rental properties, you might see 2-3% historically, super tight always. And you compare that with other potential investments. So like we said, the S&P 500 earnings yield is very low as well, anywhere from say 5-6% plus. But then you also have to compare that with all other asset classes as well. So just like in real estate, you're comparing comps between asset classes, you need a little bit of a comparable analysis as well. Because for example, the risk-free rate, on the short end of the treasuries, 3-month T-bills are 4.5%. The Fed just raised another quarter point, so 4.75%, let's say, getting close to 5% versus earning 4%, let's say, a cap rate on rental property. So, you could, as an investor, simply park it in T-bills, the risk-free rate, and collect close to 5% for doing nothing. Or you could, get calls about broken toilets and such for 4% or 3%. Doesn't really make sense. And again, you need to compare that with other asset classes, like we said, about like stocks, earnings yield as well. So this is one of the most important lessons in finance when you're deciding where to invest, what asset classes to invest. At the end of the day, it all comes down to comparing the returns you might get in different asset classes, seeing what's more attractive. And right now, because interest rates are going up, and we'll see how much longer they remain high or when they eventually start going down. But for the moment, they are going up. And there is such a thing as the crowding out effect. So more capital obviously gets attracted to these high risk-free rates, and it flows out of other speculative, longer duration things such as venture capital, which might not be able to survive or really work in a environment where there is a more normal discount rate. So anyway, we hope you found this video helpful. If you're looking to buy or sell property in New York or Florida, check us out at Hauseit.com. We can help you save 6% when you sell with our agent-assisted FSBO listing service. Or we can help you save 2% or more when you buy by giving you 2/3 of the buyer broker commission with our Hauseit buyer closing credit service. We hope to hear from you. My name is Chris at Hauseit, and we'll see you on the next one.